Introduction to rate cuts. As an experienced writer, I understand the profound impact that changes in interest rates can have on the overall economic landscape. In this comprehensive article, we will delve into the topic of rate cuts, exploring their purpose, historical examples, and the multifaceted ways in which they can influence various aspects of the economy. Understanding the purpose of rate cuts. Rate cuts, implemented by central banks, are a monetary policy tool used to stimulate economic growth and activity. By lowering the benchmark interest rate, central banks aim to make borrowing more affordable for both consumers and businesses, thereby encouraging increased spending and investment. This, in turn, can lead to a rise in consumer confidence, higher employment levels, and ultimately, a stronger economic performance. Historical examples of rate cuts and their impact on the economy. Throughout history, we have witnessed numerous instances where central banks have resorted to rate cuts to navigate economic challenges. One notable example is the Federal Reserve's response to the 2008 financial crisis, where it aggressively lowered interest rates to help stabilize the economy and promote recovery. Similarly, during the COVID-19 pandemic, central banks around the world implemented swift and substantial rate cuts to support businesses and households weathering the economic storm. The relationship between rate cuts and inflation. The relationship between rate cuts and inflation is a complex one, with the ultimate impact depending on various factors. In general, rate cuts can help stimulate economic growth, which may lead to an increase in consumer demand and, consequently, a rise in inflation. However, in certain situations, rate cuts can also help temper inflationary pressures by making borrowing more affordable and encouraging investment in productive activities. How rate cuts affect consumer spending and borrowing. One of the primary channels through which rate cuts influence the economy is by impacting consumer spending and borrowing. When interest rates are lowered, consumers typically find it more affordable to borrow money, whether it's for purchasing a new home, financing a car, or taking out a personal loan. This increased access to credit can spur consumer spending, leading to a boost in economic activity. The impact of rate cuts on business investments. In addition to consumer spending, rate cuts also have a significant impact on business investments. Lower interest rates make it more affordable for businesses to borrow funds for expansion, research and development, and other growth-oriented initiatives. This can lead to increased business investments, which in turn can drive job creation, productivity improvements, and overall economic growth. Rate cuts and the housing market. The housing market is another key area that is heavily influenced by changes in interest rates. When central banks implement rate cuts, mortgage rates typically decline, making it more affordable for individuals to purchase homes. This can lead to an increase in housing demand, which can have a positive ripple effect on the construction industry, real estate-related services, and overall economic activity. The role of rate cuts in stimulating economic growth. At the heart of the central bank's decision to implement rate cuts is the goal of stimulating economic growth. By making borrowing more affordable and encouraging both consumer and business spending, rate cuts can help boost economic activity, create new jobs, and improve overall economic performance. This, in turn, can lead to increased consumer confidence and a stronger economic outlook. Potential drawbacks and risks of rate cuts. While rate cuts can have numerous benefits, it's important to acknowledge that they also come with potential drawbacks and risks. For instance, excessive or prolonged rate cuts can contribute to the formation of asset bubbles, such as in the housing market or stock market. Additionally, rate cuts may lead to increased inflation, which can erode the purchasing power of consumers and undermine economic stability. Conclusion: the future of rate cuts and their implications for the economy. As we look to the future, the role of rate cuts in shaping the economic landscape will continue to be a topic of ongoing discussion and analysis. Central banks will need to carefully navigate the delicate balance between stimulating growth and managing inflationary pressures, taking into account the unique circumstances and challenges faced by the economy. By understanding the multifaceted impact of rate cuts, policymakers, businesses, and individuals can make more informed decisions and better prepare for the economic changes that lie ahead. To stay up to date on the latest developments in the world of interest rates and their impact on the economy, subscribe to our newsletter. In our upcoming issues, we'll dive deeper into the nuances of rate cuts, explore emerging trends, and provide valuable insights to help you make informed financial decisions.